Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to Trillions. I'm Joel Weber.
And I'm Eric Balchunas.
There's been this wildly successful launch of Bitcoin ETFs this year, Eric, and the industry just couldn't get enough. They're back for more.
Never enough with this industry.
What's
going
going
to push
on?
the envelope. Yeah.
What's going on?
So they filed for Ethereum ETFs after filing for Bitcoin ETFs. Fast forward, after the Bitcoin ETFs launched, there was sort of a surprise approval from the SEC that the Ether ETFs will be approved, and they just launched about a week ago. And it's sort of, in my opinion, like the opening band following the headliner. So it was definitely interesting, but not quite the impact and importance, I think, of Bitcoin, which is just way bigger across the board. But again, as an analyst who's been studying this stuff for 20 years, I really enjoy the horse race. It was another horse race where you had all of them lined up at once. You could really get some interesting data, compare it to Bitcoin, compare it to a regular launch, compare it to each other. Also, Ether is different than Bitcoin. So there's definitely a lot to unpack, but a little less intense than the Bitcoin launch.
You know what I can't wait to talk about is you didn't think this was going to happen.
I didn't. There's an ongoing debate on why it happened. Some people thought Gary Gensler all along thought he would approve this, but didn't want to give any signals to the issuers because he didn't want to have a circus like the Bitcoin, approval process. On the flip side, some people thought that the politics had shifted and Biden told Gensler, hey, let's lighten up on crypto a little, let these out so we don't appear to be that anti-crypto. I don't know which is true. They both have decent evidence behind them, but we don't exactly know. All we know is about a week before we had heard they're going to approve them, and they did.
I'm also really excited to bring on Stacy-Marie Ishmael, who's an executive editor at Bloomberg News overseeing crypto, digital payments, and cross assets. That also means she oversees ETF coverage at Bloomberg News. She's a longtime collaborator of mine in the newsroom. Looking forward to having her on her first episode of Trillions. This time on Trillions, Ether ETFs. Stacy-Marie, welcome to Trillions.
Great to be here.
Okay, so what is Ether?
Just starting with the softball questions, Joel.
Yeah, exactly. And what is Ether? How is it different than Bitcoin?
I would say the distinguishing factor of Ether, which Ether fans may not like, is that it's significantly smaller than Bitcoin.
I heard Eric called it small potatoes.
I am not going to say that Ether is small potatoes. I am going to say that on the merits, it is the second largest cryptocurrency after Bitcoin, and the gap between the largest and the second largest is very large, right? Where the way that folks think about Ether is not necessarily that it's a Bitcoin replacement, but that it does very different things.
And that's actually how it's built and how it operates. Everything about it is actually pretty distinct and different.
Pretty distinct
than Bitcoin. Can you explain some of that?
I'd say if you care about these distinctions, one of the very first ones that you'll point to is the way that Bitcoin is created is something called proof of work. So a bunch of energy-intensive data centers switched on all day solving mathematical problems. You've heard the spiel. Ether is maintained and kept in existence by a totally different methodology called proof of stake, which is still maths, still complex, but not something we necessarily need to go into. But the main thing that Ether fans will point to is that the energy consumption of maintaining the Ether network is significantly less than that of Bitcoin.
If you want to go down a rabbit hole, you can go read a lot more about all of this.
And let me jump in here, too, because I'm a tourist of the planet crypto. I'm an ETF guy who basically
Do you have to wear a suit when you go into that space?
Basically.
Gas mask.
Yeah. I've got a English to crypto conversion dictionary that I've used a lot. It's worn out, basically. But I've read a couple books, and one thing that struck me, and I started to understand this whole thing a little more, is Bitcoin's sort of a reaction to the dollar devaluing, right? It's like, hey, if you want to store value in something because the dollar loses valuation, and hey, governments print money, it's very politically expedient to print money if you have a problem. And so, hey, there's this thing that can help protect you from that. Ether is not about security or currency. It's like, let's do another internet that is completely decentralized and a couple tech companies can't control. So I do think some of the ethos is the same, that sort of populist, hey, things are too centralized, government, big tech. I do find that's one common thread between the two. but they're very different. And the way they're pitched is different. And I think even the way they operate is very different.
So why does the world need an Ether ETF, let alone mini Ether ETFs?
Look, if you want to invest in all this action and creativity that's happening in this decentralized platform, Ether is sort of the gasoline that runs it. So some people call it digital oil. So again, if you want access, that is friction-y to go do that yourself. ETFs kill all the friction. So that's why the world needs ETFs in general, is they're friction killers. That said, do you need Ether? And that's the question people have to ask themselves. Personally, I think a lot of normal investors, 60-40, they might buy the Bitcoin ETF and be like, I'm good. Sort of like you buy gold, you don't buy silver too. I think that's probably what's going to happen. And then there will be some people who are sold on the Ether story, but I think that's going to be a minority of the sort of bigger crypto pie.
Stacy-Marie, what's the vibe been like this year? Because it feels like this thing that was really the Wild West has started to get tamed.
I can tell you that no regulator would say that they think that crypto has been tamed and that everyone is now following all the rules that they would like them to follow. But certainly as it relates to the ETF portion of the crypto market, which is still relatively small, right? Like the overall market capitalization, market value, whatever you want to use, of the entire crypto market globally is about $1.5 trillion. And we are not quite there in terms of the direct comparison with crypto-based ETFs. But you do have this feeling that now if you are a pension fund or some other highly regulated institutional investor, you can get access either to, as Eric put it, like, you know, the Bitcoin element of crypto, or you can say, well, I'm actually interested in this idea of a separate internet, this computational underpinning, this programmable theory, I'll invest in Ether, or you just want to diversify away from Bitcoin.
When we think about investing through an ETF in this, and now the Ether people, they're all in. That's why when I did refer to the small potatoes, I got attacked for like 3 weeks straight on Twitter. They still remind me that was a little dismissive. I do think opening act to headliner is a little fair, but the idea of where do you put this in a portfolio, outside of hardcore Ether people who are all in, most people are going to like 1%, and we're talking like, and I think Bitcoin and Ether to me are part of a larger category, formerly known as hot sauce. So, you know, thematic investing, single stock investing. This is stuff to just have a little fun with. Yeah. Just in case, Joel, these people are right and this stuff goes to $1 million, I don't want to kick myself. I think that thought alone is going to power a lot of flows, even if they don't even totally understand it. People are looking to cure future FOMO now, and they have a portion of the portfolio that they set aside for that kind of stuff. But it's not, I don't see like this taking over anybody's core.
And you used to have to use a digital wallet, and now you just use your insert whatever platform you want.
But this is interesting because the hardcore people are like, you know, not your keys, not your coins. And they're like, do we really want Larry Fink to have all the Bitcoin? And he doesn't really own it. But I see what they're saying because, like, let's say the government wanted to confiscate all the Bitcoin. Obviously, BlackRock's probably going to comply with that. And that does kind of kill the whole ethos. So the hardcore people have mixed feelings on this. Yes, number go up. But on the flip side, a lot more cryptos moving into the traditional finance hands.
Yeah, and I think to that point about FOMO, you know, when you're now having a conversation with your financial advisor who maybe a year or 2 years ago might have just stared at you blankly if you said, how do I get exposure to crypto? There's more people who have a way in. Whether those folks ever end up owning a Coinbase wallet is a totally different question.
And a lot of the crypto people, they want the ETF to be like a gateway drug, and then they go set up a Coinbase account. Then they go and get a hard wallet, cold wallet, and then they want to store it in the backyard and like bury it. And these are the steps to becoming like the full crypto person.
But you go full crypto when you got it in the backyard.
But one thing on advisors and people having conversations with advisors, I do think seeing Larry Fink, right? He's the head of the largest asset manager. A lot of these advisors use other iShares products. Fidelity, they've been around since the 80s. I mean, these are massive trusted brands. I think that gives advisors some cover now. It's almost like, well, it's mainstream. The SEC approved it. Larry Fink says it's okay. Before, they didn't have any of that, let alone the friction of trying to get it. So that, I think, is an underrated point, is having that cover of like, it's now in an iShares brand. You can't really get upset with me. I just put you in an iShares ETF. It's not like I went out and got this crazy thing. We found that advisors really gravitate towards big brand ETFs, iShares, Vanguard, State Street. They feel comfortable, like you can't really fire them for that. It's like buying IBM in the 80s. So I just think a lot of cover has been given here for those wealth managers.
Stacy-Marie, what was this horse race to get ETF approval like for Ether? I mean, we spent a lot of time talking about the Bitcoin one. There was all kinds of back and forth with the SEC. What was it like this time, and who were the players that you all were watching?
Well, I think to Eric's point, the main thing that we were keeping an eye on is if the roughly same universe of people who got into issuing these, Bitcoin ETFs would do so for Ether. And, the filings landed and we're like, yeah, pretty much the same people, right? Because they already had the infrastructure. They had already gone through all of the hoops with the approval process, the SEC the first time. They knew the forms they had to fill in. They knew that they would have to fill in those forms 50 more times and make revisions.
Pay the lawyers again.
Pay the lawyers again. Shout out to lawyers, always making money on every financial product. And I think that they also figured that they would probably have a customer base that had been primed by the existence of these Bitcoin ETFs to say, hey, if you're interested in that, you might be also interested in this thing. To me, the only real surprise has been the absence of an immediate flurry of people trying to launch other types of token-based ETFs because, the infinite optimism of crypto is such that you see this other thing happen, you're like, okay, we're going to do this. And really, we've seen a couple of attempts at Solana, which is, not even the third-ranked token, but still a very popular one. But the prospects for that are much lower than they were for either Bitcoin or Ether.
Yeah, we wrote about the Solana ETF. We feel like it's just basically like a call option in case Trump wins White House, because let's say he appointed like a libertarian commissioner like Hester Peirce, anything could happen. If Harris wins, or at that point we wrote it was Biden, but if the current administration kind of continues, and even if it's not Gensler and it's somebody Gensler 2.0, it's not going to happen. And a big thing that they've kind of like used legally is that there's no futures contracts currently, and the only two coins they've approved have futures trading. It's a long story, but that was really behind the Grayscale lawsuit, which sparked all this to begin with. So no futures, no coin, but that's just the SEC's interpretation now. You get a new SEC in there, anything's possible. I'm not saying it'll prove it, but certainly now it's more of I would say the odds go up.
Why did you originally think that this Ether ETF moment wasn't going to happen?
Because Gensler had come out and indirectly just thought it was a security, and this is trying to get through a 1933 Act, which was for commodities. So if you approve this, you're sort of ipso facto saying it's a commodity. And I still don't think he thinks that. He wasn't really clear. That's one thing. The other was there was no Grayscale lawsuit here. The Grayscale lawsuit was only on Bitcoin. Now, you could say that the threat of a lawsuit would happen if they denied it, but there wasn't an actual lawsuit. So we just thought Gensler, and when the Bitcoin ETF got approved, Gensler's letter was pretty much like, I hate that I had to do this. Don't look for any other ones. He was pretty upset. You could tell he was feisty, and he felt he had to do it almost by like gunpoint. And I was like, all right, I just don't think it's going to happen. So there was a variety of reasons that we were like pretty bearish on it.
And what was the moment that you realized it was game on?
Well, there was chatter. The issuers and their lawyers start saying, hey, we just got notified from the SEC. And this was like a week before. In the Bitcoin process, people were hearing back from the SEC on like, hey, tweak this or answer this question. This is called comments. 95 days before approval. We were in day 10 we were 10 days left and I hadn't heard anything. So we were like, there's just no way. Anyway, with a week left, it was like, whoa. So it was a shocker. And that's where the political side comes in, because if you trace it, about a week before that, that's when Trump said, I'm the crypto guy. If you want crypto, vote for me. And then there was a couple other little political things. Mark Cuban came out and said, hey, Democrats, this issue is going to really hurt you more than you think. So even moderate Democrats were like, hey, please don't let them have this issue. And I can't say that those things contribute to, I don't know. But certainly the circumstantial evidence does point to maybe a little bit of a political inspiration to change their tune on this.
Stacy-Marie, we're about a week into trading. What have we learned so far?
People don't like fees is the main takeaway. If you look at what happened with the Bitcoin ETFs, there was a higher priced premium offering in the market, and then everybody else was like, what about 0%? Do you like 0%? And that very much has been the case with the Ether ETFs
and
as
the
well.
Bitcoin ones, it was just like, even before launch, they were in a price war,
Yeah.
right? So what's that look like on the Ether side?
Very similar. We have, folks saying it'll be 0% for 6 months or until we get this amount of inflows. We have people saying, well, we're not necessarily going to cut our fees to zero, but we will launch a smaller version, a mini, that has a more attractive fee structure. You get a kind of like this bargain basement feel to it where people are like, well, how is this thing different from that thing? Mostly I trust these three big names. Mostly they're kind of around the same pricing. So I'm just going to go with wherever I have an account as long as that's the cheapest option for me.
This fee war is really intense. If you look around the world, an Ether or Bitcoin spot ETF is 1% to 2%. So for these guys to come out and be like, the base fee, forget the waiver, we'll go over that in a minute. The base fee is between 15 and 25 basis points. So we're talking 5-6 times cheaper than the rest of the world or a hedge fund. This is why the U.S. market sucks all the money in, Joel. It's very powerful. Plus you add liquidity. And this is irresistible stuff. And then the waivers, so all of them but like 2 have a waiver. I'm waiting for free steak knives. Actually, I'm holding out for a Timex watch or something. And then I'm going to buy that one. And for a year or 6 months.
Does it come like, do you get an Ether steak knife and a Bitcoin steak knife?
You gotta go all in.
They
is it
should
like a
combine
set?
them, yeah. Buy both.
Yeah.
Yeah, and you get maybe, or a monthly subscription to a magazine.
But walk through the way these waivers work. We don't usually see this, but we did see them with the Bitcoin.
Yeah, it'd be like a waiver
Launches.
for 6 months, or if the ETF hits $2 billion. Whatever of those two things happen first. So they're just trying to get
Inflows, basically.
Yeah, they're trying to get people, and here's why. When you're in a race against 10 or 9 other issuers, the first couple weeks are crucial. We report on who's winning and losing. Everybody is. And if you don't have any assets or volume to begin with, you start to have a stank on you. And advisors tend to gravitate towards around the ones that are liquid. It's like a party. You want to go where people are, not to the one no one's at, right? So they know how important the first couple weeks are to getting that like winning mojo going. And that's why I think they all did it, because the Coinbase custodian fee, they all use Coinbase except for like 1 or 2, is, I heard, between like 9 and 12 basis points, something like that. So they're only making like 6 to 7. That is razor thin, and that's before any fee. This is starting gate stuff. So it is intense. I was a little shocked. I thought we'd be 40 to 60 to start, and then we'd, have fee wars over the next couple of years. But where I thought we'd be at after like 2 or 3 years.
And we're in 1 week.
Yeah.
Yeah.
Well, I guess that speaks to the power of what the ETF can do, though, right? Like if you put this thing in a wrapper, it's going to drive down the price and everything's going to be, basically transparent.
Well, the whole thing's very ironic because, in my opinion, especially BlackRock and Fidelity, they're both looking for Vanguard-free zones in which to operate so they can make more money, because they both have to continue to make money, especially BlackRock. It's a publicly traded stock. So they're like almost like an oil driller looking for new forms of oil. And they were like, wow, this is something we can do. But to go to those fees, it's almost as if Vanguard's spirit was there, even though they weren't. And so ironically, there's not a ton of revenue here. But I think what they're thinking of is long-term. Let's get customers in. We'll bring them in here. And then maybe something down the road we can charge more on. Let's just get the people. And this is something we can do that Vanguard clearly wants no part of.
Scale, in other words.
Scale, yeah.
Let's walk through who the players are and maybe even what distinguishes their offerings, if it's clear yet. BlackRock ran away with the Bitcoin game. How are they looking so far?
So they're leading, if we're doing a horse race. So flows after about a week, BlackRock 440 million. It's about double number 2, which is about a tie between Bitwise and Fidelity. Bitwise punching above their weight. They're indie, but they're real into crypto. They're like hardcore crypto people. So for them to compete with Fidelity right off the bat's pretty good. Grayscale's Mini-Me is a 164 flows. That's a good sign for them. If they didn't get any money in that, being the cheapest, that would tell us their brand is really tarnished. But I guess they're doing okay. And then Van Eck, Franklin, and Invesco are bringing up the rear a little bit. But even like, take Invesco, 15 million. That would be in like the top 10%. If you took all new launches over a course of a year, if you get 15 million within the first week, that's like top 5-10%.
Yeah, put it on the board.
Yeah, and that's like one of the last ones on the list here. So these are really strong numbers. pale compared to Bitcoin. But if you remove Bitcoin, volume-wise, these were some of the best launches in the past year. In fact, the BlackRock traded like 260 million. That's double any other launch of the past 515. You got to remove Bitcoin, though. Put Bitcoin back in, these all move down the list.
Right.
But and what distinguishes them? BlackRock would say, brand, you trust us, whatever. I think Bitwise would be like, we're actually crypto people. We're not like opportunists like those Wall Street guys.
Grayscale would say that.
Grayscale would
Yeah.
say that.
Yeah.
I think that's the two camps.
Sounds so similar to the exact same thing we heard when the Bitcoin launches happened, right? It's like us or them, right? What else jumps out to you, Stacy-Marie, about who's in this mix so far and how they're attempting to distinguish themselves?
To Eric's point, it's really do you want crypto native or do you want like TradFi full service? and that is very much, to your point about how is the market changing, that's kind of where we're going much more broadly, right? It's the folks who are like, the path forward is how close to TradFi can we get? And then there are folks who are like, how far away from those people can we be? And I will be really interested to see whether the expectation that ETFs bring in people to crypto who weren't in crypto before, there's another version of that, which is ETFs bring in people to traditional financial products who weren't in those products before because they're like, oh, I want everything to do with crypto. Previously, I didn't care at all about ETFs, but, let me add this to my wallet buried in my backyard or in my air-gapped room or whatever portfolio.
Well, I was speaking to somebody at that event in France, all crypto people. I was, again, like I felt like a tourist. And one person was saying, and I won't say who it is, but they're actually really hardcore. But they're like, in my 401k and these other certain accounts, I cannot hold a cold wallet.
Mm-hmm.
So even some of the hardcore people have some ETF exposure because it fits in the plumbing
Exactly.
of everything. Whereas a cold wallet is really totally outside the system. I think one thing also is messaging. You talk about we're the crypto people. Bitwise has this commercial ad series. It's like, remember the Mac guy?
Yes.
Back in the day, Justin Long was paired against that dork. And it was like Mac versus PC, which is really
John Hodgman was the dork, I think.
Yeah.
It was really Steve Jobs versus Bill Gates. Let's be like, but anyway, they did that for the Ether rollout. So there's the Ether guy who's like this sort of regular cool looking dude or whatever. And then there's like Mr. Wall Street. And like he only trades like not 9:30 to 4 every day, whereas Ether they have a couple sketches, pretty good. Matt Hogan of Bitwise says this: if you own the Qs and you don't own ETH, you're missing part of the technology sector. So that's a pretty strong pitch. BlackRock, they say Bitcoin's appeal is in its scarcity. Ether's appeal is in its utility. You could think of Ether as a global platform for applications that run without decentralized intermediaries. And BlackRock's messaging, and Jay Jacobs, who's just perfect at this, some people even think he's AI. He's that good. It's like they speak fluent boomer. You know what I mean? So they've taken crypto and converted into boomerese perfectly. So if you want to just go dig around BlackRock's website and you'd be like, yeah, this seems legit.
Are you outing yourself as a boomer?
They call me a boomer. I'm
He's
Gen
X,
X technically, but compared to crypto people, I'm definitely a boomer.
Okay, so looking ahead, how many more crypto ETFs are we going to see?
I think on top of the existing products, people have already come out with, let's add leverage. There's a bunch of prospectuses for that. Let's go shorts. Let's go double long. Let's combine some things. Just as a reminder, there's a lot of other different kinds of crypto ETFs. There are ETFs comprised of like publicly traded mining stocks, etc. But the biggest thing that will determine what's next is who's in the White House in November, because the regulatory environment, to Eric's point, who is going to be the SEC chair, what is going to be the approach of the SEC and the regulators overall, is the main thing that everyone in the market is waiting to see.
Eric?
Assuming the White House stays the same, not much. I think to Stacy's point, it's going to be a lot of spaghetti being thrown at the wall around Ether and Bitcoin. Like, long Ether, short Bitcoin, Ether plus Bitcoin equal weighted, market cap weighted, covered call. I mean, it's basically going to be like all kinds of stuff. And I'm telling you, one or two of these will be a huge hit, Joel. I've seen it. So they're going to try everything and anything because the assets in the collective unit is already something like 72 billion. That's a good chunk of change. Remember ESG, they threw all kinds of products out. That was only 100 billion. So we're already close to where that was. So I kind of get the product rush this is what the ETF industry does. A lot of this stuff will just be roadkill eventually, but a couple of these will make it and serve a purpose, and we'll see. But I don't think, again, the White House would have to change. Then we can talk about other coins.
Who do you think wins the Ether race? When will we know what the finish line looks like?
We predicted BlackRock and Fidelity as favorites simply because the Bitcoin race. IBIT is the GLD of Bitcoin. I mean, it's a done deal. It's not just the assets; it's the volume.
And it took 6 weeks for that?
It didn't take long. The volume is also underrated. Whoever gets the volume gets the institutions, largely speaking. Institutions love liquidity. It's the one thing they get everything in the world for free because they have a lot of money. But the one thing they can't get from an asset manager is liquidity. And certain ETFs have that liquidity. That's why they like SPY and GLD, even if they're a little more expensive. So IBIT is that. I think Ether, which, by the way, this is the first ticker that makes you speak with a Northern Jersey accent. Ether. Anyway, that's a first. But Ether is probably going to be the GLD of Ether, I would assume. That said, everybody can eat here. Some of these at the bottom are legit decent hits for a regular ETF.
And what are those tickers?
Like, for example, CETH is 21 shares. QETH is Invesco. On the Bitcoin front, I think BTCW is the Wisdom Tree. So I think that one's the last one of the Bitcoin, and I think it's over 100 million already, which, again, if any new ETF came out at 100 million in 7 months, you'd be like, that's a hit. So they're all going to make it, I think. Now, once we get to these crazy spaghetti at the wall ones, some of those will not. But I think the core ones here are all going to survive long term. But I think you got to go with BlackRock as probably being the winner if there was one.
Okay, Stacy-Marie, one final question since it's your first time on the pod.
No.
What is your favorite ETF ticker?
SPY.
Why?
Because when I was a kid, I was super into Matilda and, anything just espionage adjacent.
Oh, that's good.
I'm definitely not a spy now, but I know that's something a spy would say.
Yeah. Okay, I love that. I think that's the first time anybody's actually just said elephant in the room. The biggest one is the one that I'm going to talk about.
It's a clever ticker.
I think the Spy Kids, I think one of them might have used it, but that was
true.
it. Yeah, Spy usually most people pick some of the more crazy ones, but that's a good one.
Stacy-Marie, thanks so much for joining us on Trade Ants.
Thank you.